Trade Afrinese, I hadn't seen that before. China's investment in Africa increases 21% annually. Joining us, sorry, no, it's those animals.
Sorry, Dave, it's your mother-in-law.
I must be allergic to the bearded dragon. But joining us now to explain how China investment is going to look going forward is Lucy Corkin, Country Risk Analyst at RMB, and Jacques Botha, Chief Mining Economist at Pan-African Research. Let's start with you, Jacques. The Deputy President, Kgalema Motlanthe, in China on a state visit. What is the state of South African and Chinese relations?
David, it's very good. China seems to have a very good relationship with most African Union countries, and they feel very, very comfortable with them. And that's why the growth of all Africa is still a small pie that China is investing in, but it's actually getting very bigger. It's actually not so small anymore. Actually, it's about the second largest pie. So there's a rapid growth in investment in Africa. And there's just a big comfort with the Chinese leadership and with the sort of development state outlook in most of the African Union countries. So we see that to prosper and continue further.
Lucy, let's come to you. You were a country analyst with RMB. What major challenges do you see with regard to the relationship between China as well as South Africa? No doubt it does come down to regulation, maybe?
Yes, absolutely. But I think one of the interesting things we're seeing at the moment is that perhaps when the big China-Africa trade and investment boom started about 10 years ago, it was taken for granted that China would come to African countries with a certain package of investment deals, and these would be accepted wholeheartedly by African governments. And increasingly, particularly in the beginning of this year, we've actually seen quite a number of African governments creating a kind of pushback in terms of essentially backing up the kind of legislations that we have seen some Chinese investors perhaps overstepping, and also not necessarily accepting the first draft of what the Chinese government and Chinese state-owned investors are offering to African governments, and actually presenting their own suggestions as to how they wish to take this relationship forward.
Jacques, it seems that one of the big issues in Africa generally, never mind China, is infrastructure. And one of the issues that keeps coming up on our shows here is intra-African trade. Because of the colonial relationships, they export stuff, they've got relationships with other continents, but not with each other in Africa. Infrastructure is the big issue, so it would seem logical that a big player like China can come in and help with that. Is that happening? Are there investment prospects in that world?
There are definitely investment prospects, but there is a bit of a slowdown there. The slowdown is happening because of two reasons. The Chinese dragon itself is also sort of maybe overstepped its boundary. China's total debt as a percentage of GDP is now also very high. Some analysts say 200%. So, and we also have read about the banking crisis in China, where there's pressure on some banks to actually cut down on their debts. And that has also slowed down the Chinese economy. And that has forced the Chinese to actually revert back to old-style infrastructure development investment, like building low-cost housing and railway lines. The problem, the big change on Africa, the impact on Africa is, I think one could see that in a declaration that the new president, Xi Jinping, made about 3 months ago, where he said the big target, the big goal is not now economic growth numbers. The big target now is to improve the welfare of the people on the one hand, and also the other big target is to actually improve the quality of the environment. So we would see, yes, we could see more investment. So the target of the people to employ as many people as possible, that's going to happen. And they will still try, but there is pushback from governments to try and use their labor in Africa on projects. The other big thing is that China is getting fed up. They have major pollution problems where you have little wars, actually, mini revolutions about the bad pollution in China. So the government is really looking very strongly at that. And we anticipate a moving away where China at this stage is importing pollution by having these major smokestack industries and major steel plants. We see the big opportunity for Africa will be the second wave, where China will actually try and export the pollution and put up their plants in Africa. So that would be a major. That would, we would say, is the biggest potential. There is a problem, though, because of the problems in China, that some of the smaller investors, the smaller companies, which is maybe only about 10% of total investment in Africa, Chinese investment, the big investments, all government-owned or controlled state enterprises, those people are actually in financial trouble, many of them, and they are scaling back or pulling out of projects. And Africa is also feeling that.
Lucy, let's come back to you now. We heard Jacques mentioning there that there will be a lot more development with regard to China coming into Africa, but what about the skills development? Yes, you can use African employees, but what about enhancing their skills as well as their knowledge base from what the Chinese people bring in?
So you've got two stories here. The one story is at the high level. President Hu Jintao, former President Hu Jintao, and now current President Xi Jinping have been very vocal about what is called people-to-people exchanges and creating skills development for African people when Chinese companies come to the African continent. Then you have how this is actually implemented. And the reality of it is that a lot of these large-scale infrastructure projects that are being funded are essentially being done by China Exim Bank and China Development Bank. Now, like any export credit agency, China Export-Import Bank requires that the project that is being funded be undertaken by a Chinese contractor and that up to 50% of the procurement comes from China. Now, obviously, the reason for this is to create market entry for products coming in from China. Now, on the African side of things, we have seen evidence that African governments, Angola is actually a good example, have at the negotiating stage said, look, that's great, but we want to have at least 30% of the contract value to be reserved for Angolan service providers. So on paper, that's fantastic. The problem is when you have these large-scale projects, which in many instances are actually done according to a political timeline because you have elections coming up, you have public sentiment that you want to get ready for a certain event. These kinds of issues are almost swept away because the long-term benefits of this kind of sustainable benefit are trumped by short-term political gains, because we are still in a situation where, although we have seen a new wave of democracy across a lot of African countries, these democracies are in many cases still very vulnerable.
Lucy, thank you so much for your insights today. Well, that was Lucy Corkin, Country Risk Analyst at RMB, as well as Jacques Botha, who's the Chief Mining Economist at Pan African Research.